Welcome to Shortview Trading. It's your 1 minute market hit for Tuesday, the 4th of February. What matters today for traders? Having found support at its 50-day moving average late into the trading session on Friday, the S&P 500 continued to rally throughout Monday's session and overnight in Asia. Having said that, and despite that rally, lots of models, short-term models, still remain on buy, whether it's risk appetite models or technical models, which show that the market is still pretty risk averse and pretty oversold. But it's not all models. In fact, the put to call ratio is very much back close to its sell levels, unusually, with a contrary message to what most of the other short-term models have. Other things that concern us are the fact that the S&P and the Nasdaq have bounced quite considerably in this wave 2 relief rally. And you can see that with Fibonacci ratios. The Nasdaq's retraced about 75-76% of its losses. The S&P's retraced about 50 or so percent. Fibonacci traders like to see the golden ratio retracement. That's the classic resistance level at the end of a wave 2. That's 61.8% retracement. In this instance, of course, the S&P isn't quite there. The Nasdaq's gone beyond it, but it gives you a sense of how much retracement has occurred and therefore how little is left to go for in this wave 2 relief rally if it's a classic playbook 3-wave sell-off. Other things that concern us include the choppiness that you sometimes get after a wave 1. If you look at the RAG 1 in March and April 2018, you'll see that having initially reached buy pretty early in March, it reiterated that buy signal several times without going back to sell before we got a sustained wave 2 relief rally. That wave 2 relief rally eventually came in sort of early-ish in April through to mid-April. But ahead of that, there were several false buy signals. So for those reasons, the level of Fibonacci retracement, the potential choppiness, the lack of a signal from the put to call ratio, we're cautious here and recommend watching and waiting. That is, we recommend staying on the sidelines, watching for a clearer picture to emerge. Our aim is really to find 2 or 3 key trades each month. As such, we wait for key across the board, clear signals or a sense of real confidence that we understand how the market's behaving. So what are we watching today? 3 key things. Firstly, key macro, although it's pretty light. There's a bit out of the UK, a bit out of the Eurozone, nothing too significant. Secondly, in terms of key events, it's the result from the Iowa Caucus, the first, of course, of the on the road to find a Democratic candidate. We also have the State of the Union presidential address from Trump, 9 p.m. US time, overnight in London hours. Not much is expected to come from that that will move markets, but you never know. Certainly bears watching closely. It's important in terms of the politics. And finally, fourth quarter earnings continue out of the States today. There's plenty of stocks reporting, although none of them are particularly key. Disney, Ford will be of interest. So that's it from us. That's your 1 minute market hit for Tuesday, the 4th of February. Thank you very much for listening. Please do subscribe on YouTube, LinkedIn, Twitter, and or Facebook. Thank you.